But in terms of market structure, to continue of what Wally was saying, really important things that we need to take note of is our higher time frame is what is going to determine our overall trend. Okay, our higher time frame is always going to be daily, weekly, monthly too, but at the end of the way, monthly, I will check it more at the beginning of the month, and at the end of the month I won't check it like on a weekly basis, as it won't move that much. But daily, weekly are our higher time frames to consider. H4 and below, when I say below, is H4, H1, M15 are gonna be my intraday. Let me put it here, intraday. Okay, intraday time frames to look into, and then we're gonna have our momentum time frames that are gonna be M5 to M1. Okay, so those time frames are gonna be relevant. The most important thing about it is, I saw people asking in the chat, every time frame is gonna have its own market structure. Everything we teach you guys in terms of, let's say, FIBs, market structure, smart money concepts that Waka will cover later too, everything that we teach you in a H4 time frame is gonna apply to a H1 or M15 or M1. So what's the important thing of this? That putting everything together and understanding what my higher time frame in daily and weekly says, with our lower time frames being H4 and below, that is what's going to help us to understand what type of market we are trading. If we are trading a retracement or we are trading a continuation. Okay, so to put some sort of example here that I made a drawing, I'm going to be explaining this right now. So let's say daily is going to be my black line and H4 is going to be my red line. Okay, later on I will show you guys examples on live charts, but to get the concepts, I'm going to be drawing right here, right now. So let's say daily is the black. Okay, so every time we have a push to the downside, this is a bearish scenario, right? So every time we have a daily lower high that creates a daily low, okay, we know that that impulse on a daily time frame is going to be full of, let's say, 8 candles, right? 8 bearish candles, but we know inside we're going to have its own market structure. Why? Because now we have H4, H1 and below. So what's the important thing on this? Every time we create a new lower low on a higher time frame, we're going to look for 2 things for the market to reverse. So the first thing is going to be a break of a structure. And the second thing is going to be Wyckoff. Okay, I say Wyckoff because schematic, depending in this very scenario, will be looking for an accumulation in this zone right here to get reversals. But again, when we create this new lower low, let's put the first example that we come down here and a BOS happen, a break of a structure happen on H4. Okay, when this happens, we got to understand that my daily, let me go for black for a second. We got to understand that my daily time frame, overall, we're in a downtrend. Okay, so just having H4 breaking structure is not telling me that this is going to fly forever. This is just telling me that now H4 is in a bullish scenario and will allow the daily to retrace. Okay, so it will come to certain levels that we'll explain later. And then after reaching those levels, okay, we'll get out of the trade. Can this break to the upside and continue? Yes, of course. That's the way a break of a structure on the daily will happen. But the high probable scenario is going to be to get our money out on those levels, because we understand that now H4 was bullish, breaking this lower high point right here. Okay, so now we know that we were trading on an intraday perspective being bullish. Okay, so we were trading a retracement overall, but when we reach certain levels, again, we're gonna wait for what? Now we're gonna wait for another or break of a structure or Wyckoff on those levels. Let's say again, it was a break of a structure. And when that happens, now we're gonna be trading a continuation. And the reason is because our higher time frame was bearish. but now we have our H4 or H1, our intraday time frames now are aligned. So now we have higher time frames aligned with our lower time frames being H4, H1, and 15. Okay, so that way we can understand that we can hold trades for longer, understanding that overall daily, weekly can create a new lower low. So now we can hold those trades until a new low. Okay, again, when that happens again, we create a new lower low on a higher time frame. Okay, when this happens, we wait for two things: break of structure or Wyckoff accumulation. Now, let's say Wyckoff was the option. We have, let's say this was an accumulation, right? I was driving. So let's say this is an accumulation. Again, this happens. Having an accumulation in an H4 time frame does not mean that will fly forever until these levels. We have to understand always, later on I will explain it, what's the purpose of this happening. So always ask yourselves, what's the purpose of this accumulation? What's the purpose of this break of a structure? Because most of the times will make you think and will make you see the answer, and understanding that overall, again, we'll come to certain levels. Overall, my higher time frame is bearish. So when we come to certain levels, we'll take money out, we'll take partials, we'll get the full position out to now start looking for sells. Perfect. So again, let's do a quick thing just because I went up really quick here, but let's do a quick point here just to understand market structure. I know Wally went a little bit on it, on lower highs and higher lows and everything, but let me touch on it. So a downtrend comes with a series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Right? The most important thing is for me to have a structural point confirmed, has to have, let's say, for me to have a lower high that is valid. To validate this lower high, I need to have a lower low that is valid. Okay, if we don't create a new lower low compared to the last one, okay, and we create, let's say, equal lows or whatever, okay, that for me, this is not a lower high. Okay, you need to have a lower low confirmed to actually have a lower high. Okay, simple thing, but later on you will see a lot of examples that if you truly don't understand a structural point, you can have this sort of a scenario where I'm going to explain right now. Okay, so this is what we call the complex pullback. Okay, I will show also examples on charts. Okay, what do I mean about complex pullback? So the most important thing, again, is understanding where this is a true lower high that created a true lower low. This is a true lower high that actually created a true lower low, okay, in a bearish scenario. So now we have my structural points set, okay? When this happens, the only way I can consider I'm in a bullish market, let's say this was, let's put this was H4, just to simplify it. But let's say for me, I need to understand that for me to have a bullish H4 time frame, I need to break my structural point, okay? So what do I mean by this? A lot of times we will get confused because the market, even though I can draw it like this nice, okay, the market won't respect that the same way. So you will see a lot of times that you will have impulses, then you will have some sort of pullback and some sort of different movements inside of a bearish leg, right? So when that happens, we have to understand, first of all, if my structural point right now, right there, if we don't take it out, we are still in a bearish scenario. So I don't care that this point here creates a new higher high compared to this one, okay? Because this is just a complex pullback, okay? I really need to break my last lower high structural point that created my lower low, okay, for me to be in a bearish scenario. Okay, you will see this happening a lot of times, okay? So just to mention the complex pullback really quick before I move on, let me know in the chat if the complex pullback is clear. If you are doubting a little bit, it's fine. I'm gonna be showing examples, so it's not a problem on that. if Wakao Wali can tell me this everything correct, as I don't want to like get off the application, the app here.
The chat bar looks clear.
Everything fine?
One person's asking, is break of structure defined by the body or the wick?
Oh, really good question. Yeah, good question. Yeah, always the bodies. So we're gonna be focusing always in the bodies, not in the wicks. Okay. So again, just to mention really quick, break of structure will come from bearish to bullish. Let's say right now. Okay, lower high, lower low, lower high, lower low, lower high, lower low. This point here fails to create a new lower low, but this point here actually creates a new lower low. Okay, so for me to have a break of a structure, I need the market to do whatever but to break this point here. Once that happens, now I have a break of a structure, and now I'm in a bullish scenario. Okay, the other way around, from bullish to bearish. Okay, so
the reason why we use wicks, bodies and not the wicks, is because the wicks themselves, for example, a 4-hour wick obviously is a 15-minute body.
Exactly.
So the reason the wicks are telling you something, the wicks are saying that there was some sort of rejection on that time frame. So when we're defining break of structure, when we're defining structure at all, it is per that time frame. So you can have a bullish on the 4-hour but bearish on the 1-hour, for example. So when you're doing a structural analysis, realize each time frame is an independent analysis of structure, and then you're trying to formulate them together afterwards into a trade idea or a setup. But yeah, the wicks themselves, the reason we don't consider them in breaks of structure, because that could just be a liquidity hunt, which I'll cover in my talk later on.
Perfect. Yeah, exactly. So just to repeat here, even though I was speaking about it just before, bearish scenario, it will apply the same to a bullish one, so it's literally the same but in the contrary. But bearish scenario, if we have weekly and daily being my higher time frame on a bearish scenario, but we have our intraday time frames being bullish, okay, now we have to understand that we're gonna be this was supposed to be bearish, okay, but now we have let's say we have my higher time frame being weekly and daily is bearish. I have my H4 time frame that is bullish, but then I have my H1 time frame that is bearish. Okay, so now I have to understand, okay, that this will be this sort of a scenario. Okay, so it'll be a scenario that my higher time frame is bearish, H4 was bullish just for the sake of making the daily retracement. As we know, of course, market moves in impulse and retracement. So now H4 did its job already. So now you have H1 that broke structure, right? So when that happened in certain levels, we have to understand that now we have more sellers than buyers in the market. So now we're gonna be looking for more than selling than buying, because overall my higher time frame is bearish, and now we are starting to have my lower time frames align with my higher time frames. Okay, in this blog I'm not going to be covering M5 momentum, M5, M3, M1, because we have a whole blog for that, so I'm not going to go below M15. But just so you guys know, if we understand what's the first time frame to switch from bearish to bullish, and we understand the natural fractal market, okay, now we have to know that if we're in certain levels that we're expecting some sort of reaction, what's gonna be the first time frame to switch? That's gonna be M1, okay? That will lead to M5, that will lead to M15, okay? So knowing that is what is allowing us to enter the market before anyone, okay? So just to mention that. Then this will be to trade what? This will be to trade continuations, okay? Having my higher time frame aligned with my intraday time frame. Okay, to trade a retracement, it was what I mentioned before. Every time that we create a new lower low in a higher time frame, what's gonna happen? Okay, we know my higher time frame being weekly and daily is bearish, okay? But now I have H4, H1 in a bullish scenario. So my intraday is bullish, okay? So now I have to have the understanding that perfect, I can be looking for buys, but we have to understand that overall we're going to be trading a retracement. So we have to look now to our higher time frames to step. Let me draw this again. Okay, to step out. Now we have, let's say, H4 bullish, H1 bullish. We are trading this small retracement to the upside, but we'll get off at certain levels that we know that the market in a higher time frame will have some sort of reaction. And the probable thing here will be to now, again, look for two things. I'm going to repeat again. Look for break of a structure or white of a schematic. In this case will be, of course, a distribution that we'll explain in another block. But again, look for a distribution. Now we're trading a continuation. Okay. Perfect. To move on, live example, CAT JPY. This is on the weekly time frame. Okay, so let's mark a little bit here. So we have my low. This is my lower high that created my lower low compared to this one, right? So once we have a new lower low created, just to put all the concepts that I was explaining before together on the live charts, I need to understand that two things will happen. Okay, always ask yourself, what's the purpose, right? What's the purpose of this of this going on? What's the purpose of this break of a structure? What's the purpose of this accumulation? Okay, and always put a structure on the line to understand what's coming, right? So this is gonna be my lower high and my lower low of the weekly time frame. Okay, the time frame we're looking right now in this chart is H4. Okay, so overall we know we just created a new lower low on the higher time frame. Okay, of course, the high probable scenario will be to look for sales when we come to certain levels. But why don't trade, of course, a retracement if we truly understand what's going on? So again, you ask yourself, what's the purpose? You understand that you have a lower high and a lower low created in H4, and now you have a break of a structure. Okay, always remember your structural points. Structural points have to have a lower high, has to have a lower low created to be a true a structural point. So now when you have this break of a structure to the upside, now you're going to be looking for buys when these retrace to certain levels. Okay, I'm not going to be teaching entries right now. I just want to tell you guys the concept of the impulses and where exactly to look for buys and sells in what type of a scenario. But again, once you have H4 on a bullish scenario, if you guys remember what I was speaking just before, now we have daily and weekly are bearish, right? But now we have our H4 or H1 time frame switching to bullish. So now we can be looking for buys, okay, understanding that we're going to be trading a retracement, okay, just because my intraday just switched to bullish. But overall, okay, we have to understand that we are inside this impulse leg. So when we come to certain levels, okay, and we start to see some sort of distribution or break of a structure or whatever, we start to see those two options. Now again, let's say price distributed, what's the purpose? Okay, now we have to understand that if we are in certain levels and price is making a distribution schematic or making break structures on my intraday time frame, now we have my intraday time frames aligned with my higher time frames. So now when I sell the market, I know I can put my take profits below this low here, okay, thinking that my higher time frame will create a new impulse being a new lower low. So I will be selling on my I'll be selling at the highest point possible, be my lower high on the higher time frame that would actually create a new lower low. Okay, so let me 1 second erase all this to move on. Okay, so again, when a new lower low is created in the higher time frame, if now we just check quickly the weekly time frame, we create this impulse to the downside, new lower low is confirmed, so now I have a lower high that is confirmed. So now I know we're moving inside this impulse. okay? But again, I'm not gonna try to be selling the market right here because we know that we can have higher levels to be selling from, okay? So I'm just gonna be looking for what price is gonna be doing right there in a smaller time frame, being H4 or H1 after the lower low was created. So again, we see a new lower low on the higher time frame. So what's going on right now? What price will accumulate? What's the purpose? Okay. Again, we'll cover this tomorrow in the Wyckoff blog, but we have some sort of accumulation. Then we can be looking for buys. We'll get off at certain levels. Okay. So when we get off at certain levels, we can be looking for sells. Okay. So now we'll be looking for sales there. But what happened right now here? Okay, we're expecting the market after coming to a high level. Okay, we're expecting the market to create a new lower low because that was the high probable thing, right? Create a new lower low here. But then we see the market fails to create a new lower low and actually creates a new higher high. Okay, of course, until these moves happen, we don't actually know, we cannot know that we're gonna have a break of a structure. So we just wait for, so we'll be looking for sales all the time right here. In all this zone, we'll be looking for sales because we know that's the high probable scenario to have the market continuation to the downside. But when we see this fail to create a new lower low, and we actually, let me erase this. We actually broke a structure right here. You may point it out. Okay, again, we measure with the bodies, not the wicks. Okay, so when we have this break of a structure on the weekly time frame, now we have to understand perfect. Now a new higher high is created, so we can wait for what? We can wait for H4, H1 break of a structure. So we see the market starting to distribute or coming to a level that we know it's gonna have some sort of liquidity right here that we'll spend it later. But okay, new high is created, break of a structure, lower high, lower low. We can be looking for sales, okay? But we have to understand now that my sales are the retracement because overall my higher time frame just switched from bearish to bullish. Okay, so now we know we are moving inside this, let me point it out here. We are moving inside this bullish impulse. So everything that comes right now here is gonna be just a retracement. So when the market comes to certain levels, okay, on a weekly time frame, okay, now we point out that weekly is bullish, okay? So we know that. So we mark our lower highs and lower lows on an intraday perspective, being this H4, again, and look what happened right here. So after coming to certain levels, we see the market broke a structure to the upside, and it broke this last lower high. Let me put it in black. So, okay, so now this level right here breaks this structural point, which was my last lower high that creates my new lower low. So after that happened, okay, now I have weekly is bullish because we knew the broke structure. So my higher time frame is bullish. And now I have H4 that just broke structure to the upside. So now I have my intraday that just broke structure. So now I have both of them aligned bullish. So when the market retraces to certain levels, I'm gonna be looking for buys. Then this point here confirms that we are changing after creating a new higher high compared to the last one. And this is a new higher low. So when the market comes to certain levels, okay, I'm gonna be looking for buys. And now my buys, I'm not gonna get out here, let's say here, here, or here, okay, or here, or here. Okay, I'm gonna be getting out when a new higher high is created, because overall, when we go to my higher time frame, I'm gonna be buying right here, okay? So if I'm buying right there on a weekly time frame being bullish, I'm expecting at least to have a new higher high. Okay, so I'm gonna take my profit once we take out this high, or at least we'll get a lot of the volume out, right? So again, when that happens, we create a new higher high. we just wait for the market to tell me that we want to start a retracement. So, for example, I can actually remember that this point right here, we created a new higher high, if you guys see, and we were actually, I remember Waka, Wally, and myself, we sold this distribution that we'll explain in the future. We sold it here just to take out this liquidity, but we're expecting to even come a little bit lower, okay? But then when we saw that coming even a little bit higher, okay, now again, we know we are still in a bullish scenario, so this could actually happen. I see this push to the upside. Again, remember, this at the beginning was a complex pullback until the moment that now it breaks a structure. Let me change the color. Okay, so at the beginning, I don't know that the market is gonna fall, so I'm just waiting. This could be, okay, this could be a retracement, but then the market, this point right here, now let me put it in blue, this point right here broke a structure and broke this last structural point. So once I know that, I'm gonna be just waiting for a retracement because now I know that my weekly, okay, I know that my weekly is bullish, but I know that right now H4 turned to bearish after breaking this structural point. So now when the market retraces to certain levels, I can be selling right here, okay? Where I'm gonna be looking to take out my money at certain levels on a weekly perspective or daily perspective, okay? So again, when we come to certain levels, let me erase this a little bit. Okay, we understand that overall, this point here was my weekly push. Okay, so when we come to certain levels, I'm just gonna be waiting for what? For the market to tell me that wants to go to the upside. Because if H4 continuously creates new lower highs and new lower lows, this will create a break of a structure. But if the market lower high, lower low, lower high, lower low breaks to the upside, now I know that at certain levels, this is gonna create a retracement, and now we're gonna be buying and targeting new highs because again, now weekly will be bullish because we're still bullish, but now H4 turned to bullish right now, right there. Okay, so again, impulses confirming that we are still on a bullish scenario in H4. Again, don't get trapped right here. You see, you can make this as a complex pullback again. If your point right here is still respected, the market can move anyway and go to the upside still. Okay, the point that has to be broke to the downside to have H4 bearish is this higher low that actually created a new higher high. So everything that moves inside is still a retracement. Okay, just to put some sort of example. Okay, and then it went to the upside, then this, then the coronavirus thing went straight to the downside. Again, if you actually, that we cannot see properly, but after creating a new higher high, you actually go and see CAD JPY in these levels in M15. You will see that the market creates some sort of distribution, some sort of break of a structure too, and then we could have been selling this, and I will have been personally selling this until these levels or these levels. Okay, that will be the logical thing. Why? Because I'm expecting to be trading a retracement again, but I won't have been expecting the market to break to the downside. Okay, I always try to be on a high probability scenario, and if we know we are trending to the upside, and I'm trading a retracement, I will get my money out in these levels. If then it breaks, it breaks. That's perfect. Now we have a break of structure and we'll be looking for now for sell. Okay, so let's move on to another example. Let's erase this later one. Perfect. Now we're gonna go to AUD USD on a weekly time frame. Okay, so we can see how overall the market was creating lower high, creating a new lower low, lower high, creating a new lower low, lower high, creating a new lower low. Again, example of the complex pullback. Okay, the reason why you see the market creating this sort of higher high compared to the last one is just because daily, think about this, if the market is fractal, okay, first of all, your impulse comes from here. So everything that goes inside is a complex pullback or whatever you want to call it. But the reason why the market was moving like this is because if we want weekly to make a retracement, okay, even though it's on a downtrend, we have to have daily on a bullish scenario. So if you go and check AUD US dollar in this part of the market, you will see that daily was on a bullish scenario. But daily was bullish just to make the weekly retracement. So when we came to certain levels, okay, the market created a new lower low. Okay, then lower high, lower low, lower high, and new lower low. Okay, so overall, we knew the weekly, the higher time frame on AUD USD has been in a bearish scenario for a long time. So when we go to the daily, okay, we're gonna be zooming in right here, okay, so that's this point right here. Okay, so now again, if we see the daily, of course, was trending up, as I just mentioned, okay, and then we reach a level, okay, that will explain those levels in the future, that the market could go to a downside, right? But first of all, we need to have a break of a structure on my last higher low to higher high on the daily. So if we see the market came to certain levels, give some sort of reaction, came here, it failed to create a new higher high. Okay, we didn't create a new higher high because this point here broke structure. So now we have weekly bearish, daily bearish. Okay, so now my higher time frame is aligned. Okay, then we come here, lower high actually creates a new lower low. Okay, we couldn't even have a deep pullback, so that's fine. So now again, where do we focus? We're always going to be focusing on my last lower high, being this one that creates my new lower low. Okay, so now after this push, I'm not focusing on the market right there. I'm focusing on the market right there in certain levels to retrace. Okay, so now we're going to be focusing right here on what happened. So if we go to H1, okay, this was daily time frame. Now we go a little bit lower to H1. What do we see? Okay, we're gonna be focusing on this move to the upside and then to the downside. Okay, so this was my daily lower high that created my daily lower low. Okay, so after we have a lower low created compared to the last one on a higher time frame, what are the things that we're expecting? Okay, so if we see H1 breaking a structure to the upside, now we can buy at certain levels, knowing that what? Now we have the intraday being H1 and H4 on a bullish scenario, okay, and daily, weekly bearish. So now we are trading a retracement. Okay, now we're gonna be buying here and we're gonna get out at certain levels, but overall we have to understand that H1 time frame is just supporting the daily, weekly retracement. So again, when the market came to certain levels of the daily, understanding that this was my overall impulse, like this, came to certain levels, now we have a break of a structure. My last lower high higher low that created my last higher high broke a structure. Okay, everything that goes inside is a complex pullback. Again, right now here. Now right here, just to point it out, we don't have any sort of new lower high. Why? Because no one of these levels created a new lower low compared to this one. We just were creating equal lows. Okay, but then you have this point here that creates a new lower low compared to my last one. So now we have a place to play with. Okay, when it comes to certain levels, we will sell it. Now again, this point here, complex pullback, whatever you want to call it, comes to certain levels, and this point here creates a new lower low compared to the last one. So now this one is a true lower high, and this one a true lower low. Okay, so now again, when it comes to certain levels, we can sell it. Okay, again, I'm not teaching entries right now, just understanding that, again, when this H1, H4 tend to bullish, okay, this was a retracement trade. when H1 turned into bearish, okay, now we have daily, weekly bearish. So now we are trading a continuation. Okay, so this was an example of, let's say, a breakdown without giving entries, but from a weekly perspective, understanding intraday, and then when it's aligned, going to a lower time frame. Okay, this example again, USD CAD. Okay, this is a trade that we have been calling for students for a long time. It already reached this level, but the PDF was made before. But again, how did this happen? Okay, we have a new lower high that creates a lower low. Okay, so now we have a push to be working from. Okay, so we have this bearish push. Everything that happens inside, if my last lower high is respected, I'm going to be moving myself on a bearish scenario. Okay, the moment if this breaks to the upside, then that's different. Okay, and we have a break of a structure. But if those levels are respected, okay, I'm always going to be selling. Again, why do I call this a complex pullback? Let's zoom in a little bit. Okay, so this was my push to the downside. Retraces, we can be looking for sales, but we have to understand that this is not a lower high, because this point here fails to create a new lower low down here. But at the same time, it also, when it came to the upside, failed to create a new higher high. So we understand that these levels right here were not able to create a new higher high. So this is what we're going to call a point of interest, that again, we'll explain that in the future. But this point here is going to be a point of interest, but it's not going to be a true lower high. Okay, so I put the cross just on the side, so it's not a true lower high. We are still moving inside my bearish push. Okay, again, this point here creates a new lower low compared to that one, but what's the important thing here? This was not a lower low. Okay, so we are still moving the same structural points right there. So again, this was some sort of point of interest that we could be playing from, and understanding that we were inside a bearish push. So still we can be looking for sells, but just to understand that this is also not a lower high, because we don't create a lower low compared to the true one, the one that actually created the lower one. Okay, so then we move on. This is daily breakdown. Okay, you guys can see this is the daily one, daily lower high, daily lower low. Okay, and this is H4. Okay, so again, what happened when the market comes here, creates a push? Okay, we didn't have like a true point here, let's say in H4, to buy the retracement. This point here creates a new higher high, perfect. But then we have a break of a structure. Okay, so this point here breaks the structure in H4. So when that happens, now we know, okay, daily is bearish. Now we know H4 is bearish. Okay, so they are aligned. So we're gonna wait for certain levels to sell the market, because now I know my intraday is aligned with my higher time frame. Okay, this is what we call the complex pullback. The reason why we see these levels like this is because we are in an H4 time frame, so probably H1 was bullish. Okay, but H1 was bullish just to make the H4 retracement to certain levels. Okay, so when we go to a H1 time frame, what do we see? We see, now again, this is my this is my H4 lower high that created my H4 lower low. Okay, so if we see H1, what happened is H1 broke a structure right here, didn't give me the entry maybe that I wanted, but this point here came to a higher level. So now we can be buying the market. You can be buying, but understanding that you're gonna get out at certain levels, because H1 is just bullish to make the H4 retracement. Okay, so when we follow the structural points, now we see this created a new high, retracement, and this created a new high. Okay, then we see the market did not respect this structural point. So now we are bearish in H1. So now we have, again, we have H4 impulse is this one. So H4 is bearish. H1 just broke structure to the downside, is bearish, but overall daily, my higher time frame was bearish too. So when we come to certain levels and I'm selling the market, I'm not getting out, let's say right here, right here, right here. I'm expecting a new lower low compared to my last structural point. Okay, overall, we could have even hold the trade longer because we understood that this is a H4 lower low, but overall daily is bearish too, and we have nice targets to the downside, so the potential was there to hold. Okay, up again after creating a new lower low in H4. Let's see what happens. Okay, we see the market reaching some levels at the beginning, respecting my last lower highs that create my lower lows, but then we see the market that starts to fail, creating a new lower low. So then complex pullback, we are still in a bearish scenario. You can be selling right here, but when we see this point fails and breaks a structure, now we can be looking for buys because we just broke H1 from bearish to bullish, and now we can be buying, targeting certain levels of H4. But again, when we reach those levels, we'll see that H1 creates a new higher high, and then we break a structure. So now, again, we have daily bearish, have H4 bearish, and now again we have H1 bearish. So now we're going to be trading a continuation to a downside in a bearish scenario. So now the market comes and creates new lows compared to the daily one. Okay, moving on. Again, EuroCAD. Okay, this is a little bit more tricky, so I put some notes right there. EuroCAD on a H4 time frame. Okay, we see how the market creates from a higher low, creates my new higher high, but then the market breaks a structure. Okay, so now the market we know is bearish on H4, so we understand that we can come to certain levels to sell from. Okay, so when we come to a H1 time frame, I focus on my last lower high that creates my last lower low points. Okay, so I know this point failed to come and create a new low, but this comes to the upside. So now I can be buying a retracement, and this comes and creates a new high and comes to the downside. I see it's not respected. Okay, I see a retracement and I see a new lower low. So after that, I can be selling right here. But when I'm selling, I'm break even or whatever happened, I see that the market fails to create a new, sorry, no high there. This point here fails to create a new lower low. Okay, so when that happened, I'm just waiting, but then I see the market ranging. And after that, I see that this point here breaks a structure. Okay, so now when the market comes right here, I can be buying a H1 perspective. So market retraces, I'm buying to certain levels. Okay, when I see then the reaction, what do I see? I see that after all this mess in a H1 perspective, okay, we still had to have our eyes that H4 overall is bearish. So I'm just following the market, see my last higher low that creates my last higher high, broken down to the downside, retracement. Okay, again, another break of a structure. Now H4 and H1 are both bearish. I'm looking for sells. This point here actually creates a new lower low compared to this one. So when the market comes to certain levels, I'm going to be selling. This point here creates a new lower low compared to this one. So the market, when it comes to certain levels, I'm going to be looking for sells because now I have H4, H1 trending bearish and respecting each other. Actually, this trace had documented one that we took, and it's also my Telegram if you guys want to go and look it later. Perfect. So now that was EuroCAD. Now we go to GBP AUD. I'm gonna be repeating myself a lot because from the experience and from students that we have in the past, even though I can go really deep right here, I know that you guys will get the concept, but then when you start to apply it in life, you guys will struggle a little bit, and that's the reason why I've done like 15 plus hours for actual students in terms of market structure. So don't worry if there's anyone kind of struggling or not getting everything, because we will provide also PDFs and everything so you guys can get it. Another example, GBP AUD. Okay, we see the market trending to the upside, consistently creating new higher lows and new higher highs. Okay, after that, the market, if you look right here, when it's at certain levels, fails to create a new higher high. So now I see the market big push to the downside. Perfect. Again, the market retraced, not maybe to the levels that we wanted, but we see that this point here created a new lower low compared to the last one. So now I ignore all these levels right there, and I'm focusing right now on this bearish impulse and everything that happens in the retracement right there. Okay, so this trade, probably you won't understand it right now, but it will come with some sort of refinements that we teach in day 3, if I'm not wrong. Okay, but again, this was H4 time frame. So now I know the most important thing here to mark today, H4 now is bearish. Okay, so when I know that, you guys will learn the refinement. I will come back in the future to just to point it out. But again, now we see this is H1 time frame, or sorry, no, this is okay. We have H4 and H1 sharing same structural points. That's something that is going to happen a lot of times too, having the same lower high, lower low, high low, high high from H4, H1, or even daily with H4. That's going to happen. But then we go to M5 time frame, okay, I know, or M15. Not to go too much slow, but just to show a little bit. When we have certain levels that we know the market can react, okay, what do I have right here? I have higher low, higher high. Do it with the pen. Higher low, higher high, higher low, and higher high. We reach a point of interest that we will teach in the future, and then we have a break of a structure. So again, now, if we know H4 is bearish and H1 is bearish, and now we have our M15 or M5 aligning with my intraday, okay, now I know this can be the moment to be selling the market, of course, in our window that we'll speak also in the future, okay, and understanding that this point here, you are selling the market right there from H4, and you can actually predict a new lower low, compared to the last one. Okay, now you are trending and you are having your intraday perspective aligned with your, let's say, momentum being a lower time frame. Another example, GBP USD. Okay, GBP USD. Okay, perfect. This is a H1 time frame. Okay, but I just marked right here that this was also my last H4 higher low that created my H4 higher high. Okay, so now in H1, I see that the market was trying to respect. Okay, this is not a true higher low because it not create a new higher high, but this point here, yes, perfect. Now we see a break of a structure, the market trending down. Perfect. See, liquidity again, lower high that creates a new lower low. Okay, the important thing to understand in this picture is overall H4 was bullish. We are moving inside this impulse. So when we come to certain levels, lower high, lower low in H1 breaks to the upside. So now I have H1 aligned with H4. This point here creates a new higher high. Okay, so now where I'm focusing on certain levels inside my last push. But what the most important thing to notice here is that H4, H1, both trending in the same direction. Okay, so that's why this trade, I took the screenshot, but this trade actually came to these levels. And this one will show you guys after the bootcamp when the lower time frame is done. This was a 1 to 60 trade, buying it from right there, okay, to take out all these levels until coming right there. Another example to show AUD CAD on a daily perspective. I have this push here that creates a new lower low. Okay, after that you see some sort of move to the upside, that if we go to a H4 time frame, you see it on a way of this point here fails to create a new lower low, tries but fails, and then we break a structure. So now when that happens, what we're talking about, daily is bearish, but now H4 is bullish, and we have a lot of room to go to the upside. So now we're gonna be buying on H4 on an intraday perspective, understanding that we'll come to certain levels on a daily perspective. Okay, again, if we're buying right here, the high probability scenario is to get out at certain levels that we'll explain in the future. Okay, if we actually watch price action, this was a trade that we were trying to sell when it came to certain levels. If we see this is H4 time frame, we didn't have any moment when the market broke a structure to the downside, so it was just ranging. And after that, we broke my last daily lower high. Let's move right here. So this point here, okay, now it's gonna be considered as a new higher low because this broke to the upside, making a daily break of a structure. Then the market, okay, ranges, okay, but this is not a higher low because does not create a new higher high, creates a double top, okay. After that, small retracement, and this point here actually creates a new higher high. Okay, so now we can mark my new impulse right there, and my true higher low that creates my true higher high. So when we come to certain levels, okay, now we switch our perspective, okay, H4 and daily were sharing the same structural point, so let's go to M15. Okay, so now just to point it out again, daily now is bullish, H4 is sharing the same structural point, so it's bullish too. So now I have my higher time frame bullish, have my intraday bullish. Now let's say what it says in a lower time frame. I'm not gonna go below M15, but just so you guys see, when we came to these levels right here that I was pointing, okay, and we understand that when we start to see some sort of, that's why I put point of interest right here in M15, when I have my last lower high that creates my last lower low broke to the upside, now what is coming? A break of a structure. So now I have M15 is bullish too. So what I'm going to be selling in this scenario, I'm always going to be buying in this type of scenario that have M15, H4, and daily bullish. So this point here retraces, creates a new high, another opportunity to buy, consistently M15 creating new higher lows and new higher highs unrespected. Again, this point here creates a new higher high, another opportunity to buy. Okay, and after that, where are we holding the trade? So if we go to a higher perspective and we are able to enter in these time frames, okay, now we're gonna be holding this trade because we understand that we are buying at these levels and we are expecting a new higher high compared to the last one to be created. And that's the way you put, like what Wakar said for a second, that's the way you puzzle out the things to get our higher time frames aligned with smaller time frames to get an overall direction of the market and understanding, are we trading a continuation? Are we trading a retracement? Why is this happening right here? Always, what's the purpose? Again, remember that sentence. What's the purpose of this accumulation? What's the purpose of this distribution? Okay, the answer of that will always come with what? Will come with a true understanding of market structure from a higher time frame to a lower time frame. So just to point out another example, USD CAD from H1 to H1. Okay, so lower high to lower low, we are inside of this impulse, right? Sorry, this is more clear because this is the H1 time frame. Okay, so I have my lower high creates my lower low. Perfect. After that, this is a trade that Wally got in, ended up being a 1 to 70 or something like that. We're not going to be showing the M1 entry, but just to understand why he was looking for buys is because after a new lower low is created on an H1 time frame, what happened? This is M15. Okay, now I have my last lower high, lower low. That creates a break of a structure. Remember the complex pullback. Everything that comes inside my push, okay, is gonna be just trying to be healthy price action after this institutional move to the upside. So this is healthy price action, filling out a lot of things that we'll speak about in the future, and then come to certain levels. This point here, okay, this is not a higher low because this point here does not create a new higher high, but this point here is my true, this point here is my true higher low that creates my true higher high, because actually creates a new higher high compared to the last one. So everything here was just a complex pullback until a level that can creates a new high. Wally enter here and buys M1 if you want to go and back test it, even though we haven't spoke about right now. But after that, again, point here, equal highs, maybe you can look for another buy. And understanding that the most important thing is, okay, H1 is bearish, but M15 is trending bullish for something. And that something is go and reach those levels up there. That we have another things that we'll speak in the future too. Another example, Euro US dollar, okay, we see again, they think this is M15, so I'm gonna go on this one. This example, I'm gonna go a little bit lower, but that's fine, just to show you the true, how fractal the market is, and what's the importance of this understanding from M15. Okay, this was M15 and H1 perspective. They were sharing again, in this case, they were same structural points, higher low, higher high. Okay, comes to certain levels, and now we're gonna see the market on a M5 time frame. Okay, so look what happened. This point here creates a new high. Okay, this point here fails to create a new high, double top, but then this broke structure. Now what comes? The retracement is a sell, creates a new lower low. So when it comes to certain levels, again, we can sell the market because we understand that we have a lot of space to fill, that we'll speak about again in the future. But then when we come to certain levels, what do we see? Again, this is another lower high that creates a new lower low. We see a break of a structure. Now we are in certain levels that we can be looking for buys in a smaller time frame. And now these buys right there that will explain the refinements of this trade. Now we are pro trend. So now we're looking to buy here at these levels. And now what we are expecting, we're expecting a new higher high compared to this one to be created, because now we have M15 and H1 that we're sharing both a bullish structural point, and now we have M5 or M3, okay, M3 aligned with them. Okay, that's the most important thing. Perfect. So again, this really good example, it was a 1-to-100 trade, Euro JPY, based from a monthly time frame. This is the monthly. Okay, so where does the push come from? The push comes from here to here. Okay, so now we have this bearish push. Everything that moves inside, okay, remember what we're speaking about, that's a complex pullback. Okay, look how many examples do we have. And the reason of this is because, again, if we are looking the monthly time frame, seeing this sort of bullishness is just because weekly, okay, is being bullish to make the monthly retrace. When we come to certain levels, okay, we see that the market was always respected. And then this must be a break of a structure. This push to the downside must be a break of a structure on a weekly perspective. Okay, so now we'll have monthly is bearish, and weekly after those levels tend to bearish too. So now I have my higher time frame right here that is bearish. Okay, then we go to H4. Okay, we're gonna focus right now on here. Okay, now we're gonna be looking on this area right there. Okay, so after that, the monthly and weekly are aligned on a bearish scenario. We see that the market in H4 is trending to the upside. Okay, consistently creating new higher lows and new higher highs. But then look what happened. The market came to certain levels and fails to create a new higher high. And after that, this point right here creates a new lower low. This point here is the actual one that made the BOS, the break of a structure. Okay, so again, we see the market creates a retracement. From here, creates a new lower low. So where I'm focusing right now, I'm focusing again on other levels. I'm not focusing on right now on those levels up there. I always have to put my eyes on where's the last impulse that is occurred. from my last lower high that creates my last lower low. And then, okay, this example I will go in depth on the day of prime setups, on the day of a smaller time frame, because this was a breakdown from a monthly to a weekly to a H4, M30, M15, and being the entry on M1, and we sell it right there, and until creating these new lower lows compared to that one was like a 1 to 100 or something like that. So yeah, just to show you right now here why the market came to the downside until this low. The most important thing is monthly and weekly both varies, and then even my intraday was aligned with my higher time frame. So overall, I'm looking for sales after this push of H4 high low high highs was done. So